You are welcome to my presentation on bankruptcy and insolvency accounts. Bankruptcy and insolvency accounts. In this presentation, I shall examine 1. Meaning of bankruptcy. Meaning of bankruptcy. Differences between bankruptcy and insolvency. Differences between bankruptcy and insolvency. Meaning of bankrupt. Classes of creditors. Bankruptcy accounts, which shall include the preparation of statements of affairs and deficiency accounts. I will also examine the differences between balance sheet, that is the statement of financial position in accounts, and statement of affairs. All these shall be considered. All these shall be considered in this presentation. So, what is a bankruptcy? Bankruptcy is a compulsory administration of a person's estate by the court for the benefit of his creditors generally. The compulsory administration of a person's estate by the court for the benefit of his creditors generally. I repeat, bankruptcy is a compulsory administration of a person's estate by the court for the benefit of his creditors generally. So that is, the court will administer the person's estate compulsory, then administration of a person's estate by the court for the benefit of his creditors generally. Bankruptcy is different from insolvency. Bankruptcy is different from insolvency. A bankruptcy is a permanent inability of a person to pay his debt. Bankruptcy is a permanent inability of a person to pay his debt. Permanent inability of a person to pay his debt, that is bankruptcy. On the other hand, insolvency is a temporary. Insolvency is a temporary. I've told you that bankruptcy is a permanent inability of a person to pay his debt as at when due. But insolvency, on the other hand, is a temporary inability of a person to pay his debt as at when due. So, a wealthy individual can be insolvent but cannot be bankrupt. A wealthy individual may be insolvent if he does not have enough cash in hand to pay its debts as at when due. If a wealthy person does not have enough cash to pay his debt as at when due, such person is said to be insolvent but not bankrupt. But his creditors cannot institute a bankruptcy petition against him. I've told you that a wealthy individual can be insolvent but cannot be bankrupt if the person does not have enough cash in hands to pay his debt as at when due. The creditors of that wealthy individual cannot institute a bankruptcy petition against the person. That is bankruptcy. Bankruptcy is the term used for an individual or partnership business. Bankruptcy is the term used for an individual or a partnership business. But if it is a company, the correct word is liquidation. Company can go on liquidation, but not bankruptcy. Company can be liquidated, but not bankrupt. So the correct word for company is liquidation and not bankruptcy. Who is a bankrupt? Bankrupt is a debtor against whom bankruptcy petition is presented. The debtor against whom bankruptcy petition is presented is said to be the bankrupt. In bankruptcy accounts, the following accounts shall be prepared. Accounts required. Number one, we have the statement of affairs. Number two, deficiency account. Deficiency accounts. And three, trustee final statement of account. These are the accounts required to be prepared in bankruptcy. I want to start with statement of affairs. Statement of affairs. A statement of affairs is a statement that shows the financial position of the debtor as at the given date. A statement that shows the financial position of the debtor as at a particular date is said to be the statement of affairs. That is, it shows the financial position of the bankrupt as at the date of the adjudication order. A statement that shows the financial position of the bankrupt as at the date of the adjudication order. So, in the statement of affairs, you are going to have the assets and liabilities. Assets at their realizable value. You will have the assets at their realizable value in the statement of affairs. Realizable value means the amount you can recover from the asset if that asset were to be sold. That is the amount at which the asset can be sold, not the book value, not the balance sheet value of the asset. Although it is possible some of the assets may be sold, that is, may be realized at their book value. If I say the book value, I mean the balance sheet value. So, some may be realized below the book value, some may be realized above the book value. So the assets will be shown at their realizable value. So the statement of affairs is different from the balance sheet. It's different from the statement of financial position prepared in the accounts. It's not the same as the statement of financial position prepared in accounts. So I therefore want to look at the differences between the statement of affairs. Differences between the statement of affairs prepared in the bankruptcy account and the statement of financial position. Differences between the statement of affairs, the one prepared in the bankruptcy accounts, and the statement of financial position, that is your balance sheet. Now let me tabulate that. Balance sheet, that is the statement of financial position, the one prepared in the account, and statement of affairs, the one prepared in the bankruptcy account. Differences between the statement of financial position, that is balance sheet, prepared in account, and the statement of affairs prepared in the bankruptcy account. Number one, in the balance sheet, that is statement of financial position, assets are shown at their book value. That is at, let me say, at historical cost. Historical assets are shown at their historical cost, except those that are revalued. Show the assets at their historical cost, except those that are revalued. But in the statement of affairs prepared in the bankruptcy, assets are shown at their estimated realizable value. You are going to show the assets at their estimated realizable value. 2. Statement of financial position is prepared for use by the owners. Statement of affairs is prepared for use by the owners of the business, or owners and other stakeholders, by the owners and other stakeholders. But the statement of affairs prepared in the bankruptcy account is prepared for use by the creditors. Prepared for use by the creditors. 3. Balance sheet, that is the statement of financial position, must not include private asset of the owner. It must not include the private assets of the owners. Remember the business entity concept, which is used in the account. The business and the owner are separate entities. That means the private asset of the owner will not be considered in the statement of financial position. But the statement of affairs must show all assets of the debtors, including his private assets. Must show all assets of the debtors, of the debtor, including his private assets. All assets of the debtors will be included in the statement of affairs. Assets are classified in accordance with their expected useful life. In the statement of financial position, assets are classified. Assets are classified in accordance with their estimated useful life. Then, but in the state of affairs, assets are classified into two: those that are charged as security and those that are not charged as security. Assets are classified into two. That is, those that are charged as security. That is, assets are classified into two. That is, those that are charged as security and those that are not charged as security. Number 5. Liabilities are classified in accordance with the period with which they fall due. Liabilities are classified in accordance with the period to which they fall due. That is, you classify your liabilities into the current liabilities and the non-current liabilities. Liabilities are classified in accordance with the period to which they fall due. Then, in the statement of affairs, liabilities are classified in accordance to their priority. Liabilities are classified in accordance with their priority. That is, preferential creditors, secured creditors, and unsecured creditors. Liabilities in the statement of affairs are classified in accordance with their priority. That is, preferential creditors, secured creditors, and unsecured creditors. I've itemized the differences between balance sheet, that is the statement of financial position, and the statement of affairs. So, this will be the end of the part 1 of my lecture on bankruptcy and insolvency accounts. Part 2 shall cover the preparation of bankruptcy accounts. The preparation of bankruptcy accounts, that is the preparation of the statement of affairs and deficiency in accounts, the classification of the assets and the classification of liabilities. So that shall be covered